billion of net income a quarter. And what is Apple doing with basically 20 to 30 billion net income a quarter? Well, they actually spend it all buying back their own stock. I kid you not, if you look at the top here, they spend 20 to 25 billion dollars of net income every quarter solely buying back their own stock. I mean, that's insane because they have a dividend too. The dividend only costs 4 billion. Since they have so much leftover money, they just spend it all on share buybacks. That's why there's so much future growth expected with Apple. And here's what the share buybacks do for you. If you look at the net income is up by 9, but the net income per share is up by 12. Again, the net income growth and the net income per share growth should always be the exact same. The only thing that changes the EPS growth is the share part of the ratio, and the share part of the ratio went down, making the EPS artificially go up, which when the EPS artificially goes up, that makes the PE ratio artificially go down. And so literally, whenever a company does share buybacks, it pretty much gives you more ownership. It forces the stock to go up. Whenever they buy back those shares too, they don't have to pay dividends to those shares. It's just a great thing for the shareholder. What app is this? Yo, is it Weber? Yeah, hey, by the way, if you want to get this app I'm on, this is actually a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there. And yeah, lowest fee brokerage out there. It's free. But if you deposit $100 too, we'll both actually get some free stocks. It's an affiliate link too, full disclosure. So let's see. Oh, BME. Did I not get to BME stock? Oh, we already did that one. There's some good ones here. HOG stock. So this is Harley Davidson. Actually, this one isn't great. You know, they just sell motorcycles. They just sell a commodity, and they kind of went woke or something. I heard some people, like my motorcycle guy, he's like, nah, dude, I don't like Harley Davidson anymore. I still don't remember what they did, but it was some sort of political move. But anyway, this is actually unfortunate. Harley Davidson is the same price that it was in 1999. So you bought the stock in 1999. It's the exact same price that it is today. It's rough. Yeah, the net income's choppy. Yikes. The revenue, the sales are down 19% year over year. So motorcycles, I guess, aren't selling too well. And the net income's down 50. Is that real? Yeah, that was real. Yo, I can understand why this stock is the same price that it was in 1997. Yeah, I'd stay away from them, to be honest with you. I mean, it doesn't look like they're going bankrupt, but that's just nasty, terrible, negative growth. Oh yeah, so ISRG right here. This is a really cool medical device company right here. They make those like chemotherapy big screener machines, and then they also service them. This is a great growth stock, but the multiple is a little too high. But they're worth looking into. Check this out right here. Yeah, if we go to the PE ratio, which is price to net income, it's a little expensive, 64 times net income. But here's why they definitely deserve it, in my opinion. If we go to their main business, their instruments and accessories, it's super growthy. It's up 18% after it grew 17, after it grew 21, after it grew 12. So the growth is really nice on that business. And not just, their main business, but also their services revenue, where they service the machines. That's up 24% to a new record. Like all their businesses are at a record. And the expectations are expected, like EPS, they beat on EPS by a huge margin every quarter. If they're beating like this much on every quarter, they're going to be beating in the future too. And check out this net income. I mean, this is amazing. They're easily making 500 to 700 mil of net income a quarter at this growth rate. What's it going to be the same time next year? And also just adding to the cherry on top here, this is an absolute insane balance sheet. You're not going to believe how much interest they make just on their cash. So right now, they have $5.33 billion of cash and no debt. Yeah, look at that balance sheet. No debt also. It's a completely debt-free company with $5 billion of cash, and that cash isn't just sitting there doing nothing. If we go to their interest, so this is the money the interest they're making on their cash pile. They made $88 million of interest on their cash, and that goes straight to the bottom line. It's crazy. So pretty cool. What stock owns number one spot wise in your portfolio? Yo, that would actually be Comfort Systems right here, and it kind of grew to that position. But yeah, it's worth $9,900 here. I'll do a super quick portfolio update for you. But yeah, that's my largest holding by far. My second largest holding would be CEG, Constellation Energy, worth $5,300. And then we also have a Webull portfolio, which full disclosure, I love being fully transparent. Look at this all time. If you look in the top left, we're only up 22% all time. We're up 0.8% on the day. Buy every day. Check, do AMD. Hey, Money, what up, dude? I do own AMD as well. They're one of my better performers. I wouldn't buy AMD here, but congrats if you own this one, because AMD is pretty much at an all-time high from that OpenAI deal. OpenAI plowing AMD orders, chip orders. So, anywho, let's get back to the update here, or stocks here. So, Sam said URG stock. Let's do URG. What is URG? So, this is UR-Energy. So, I actually haven't heard of this name before. Hasn't done too well. It's the same price that it was in 2021. But let's go check out the numbers here and see what analysts are expecting. revenue is supposed to fall 50% year over year, so that's not good. That's not good. Sometimes I add stocks to my watch list to like short them. So revenue's 10 mil. They lost 20 mil. What's the market cap? 550 mil. I don't know. I'm actually going to remove them from my watch list. Again, some stocks are out of my watch list just because I potentially want to short them. But yeah, nothing looks good here, to be honest. I mean, the growth is there. Like there were like that's 2020. Where there's two missing quarters here. What the heck? 2024. There's a missing quarter. I don't know. They had no revenue last quarter. That's what it was. So they didn't make any revenue. I don't know. I'd be so careful with that one. That probably wasn't too helpful. I do apologize there. So Willie said RGTI. This is basically your quantum momentum play right here. There's no real fundamentals on this stock. Or let's see if there's any news down here. Riggedy Secures. Oh, look at that. $5.7 million defense order shifts to government focus. That's interesting. For a cloud service with quantum infrastructure installation. Hey, well, that's Riggedy computes significant short volume. Well, what's the short volume? Hold on here. Whoa, the short interest is 15% on this company. So 15% of all the shares are being shorted. Anyway, this is a pure momentum play. If we go to their actual, like, here's why I can't trust this one. I don't know I wouldn't trust this one with a lot of money, but if we go to the revenue, I mean, it's $1 million. I mean, it's 1.8 million. It's down 42% from the previous year. They're losing 20 mil of net income a quarter, but it's tough. I guess there is some growth expected, 2.6 million in 2 quarters, but I don't know. It's pure momentum quantum name with no. I don't like those kind of stocks just because they don't have any money. Like, you're paying for so much future hopium with that stock. But just buy now and trust them. You want to swing trade that one, I think. What about YouTube? Yo, Mr. Ask, what do you mean there? Like, do you mean YouTube stock or I don't know. Yeah, I'm streaming. By the way, I'm streaming on YouTube and TikTok. Yeah. By the way, my YouTube channel is called Nathan Robert. It's also in the link tree. By the way, that's the best way to support me. By the way, I sell nothing. I have no course, book, WhatsApp. I'll never follow you, DM you. Only thing I do have is a YouTube channel. So if your best way to support me is just subscribe to my YouTube channel, watch the stream from YouTube, because TikTok keeps randomly taking down my stuff. But yeah, my YouTube channel is called Nathan Robert. It's also in the link tree in my bio. But yeah, just type in YouTube Nathan Robert. All right. So Guru said TWST stock. What is? I've never heard of this one. Let's check it out. Twist. Oh, it's a bioscience company. Actually, they have a decent market cap, though. A $2 billion market cap, but the stock is done terrible, flat from 6 years ago. Let's see what they do. So next generation sequencing tools. That's good growth. That's really good growth. The revenue's up 28 after it grew 61, after it grew 36. So that revenue's at a record. They also have their synthetic genes. Oh, so some maybe gene splitting company. Well, they actually have real growth. I actually like this one a lot more than like a what's that called? The one that like a Gilead Science or like a CRISPR Therapeutics. This one, out of all three of these, I'm actually going to put them on the watch list just for fun. I probably won't own them, but they probably are one of the better plays out there. Oh yeah, and ARK owns it. So ARK Invest owns it, and she owns CRISPR Therapeutics, so she must have liked this one too. So it looks like some sort of diagnostic and research. They're in the gene therapy, gene splitting. Anyway, yeah, there you go. King said Oracle stock. Let's do Oracle right here. Yeah, Oracle. This is your huge cloud play. They have so much backlog right here. Let's see if we go to. So this is the crazy part. So look at this. This is the Oracle's own projection. Okay. Oracle projects $225 billion of revenue by 2030. So fiscal 2030 revenue of $225 billion for that year. Right now, if you go to their revenue of, it's 15 bill a quarter, we'll round it up to 15 bill. They're doing $60 billion a year currently. And they're expecting, in the year 2030, full year, $225 billion of revenue. That's an absolute growth monster. I would love to see that. That'd be crazy. That's honestly why they stock gapped up so much on earnings day. They had like 300% backlog in their cloud. If you didn't guys know that US TikTok cloud is now on Oracle or the data and stuff. They have a dividend too. You get a 0.65% dividend. They raise the dividend every year. Maybe they'll be able to raise it more with this new growth. So Oracle's really growthy. They're opening up like 30 new data centers. I remember when they announced that they're sent up the whole AI ecosystem. Would you sell some Powell shares right now? If I wasn't me who just diamond hands, probably. But me, nah. Even though I'm up 4.5x on this stock and it's nearly at an all-time high today, I'm not selling a single share, not even trimming one. Because here's the thing, even though they're at all-time highs, they're only trading at 24 times net income. I mean, that's still fair. I mean, I have no reason to sell out of them. I mean, why? For most people, that would probably be worth. It would make sense to trim or something, but not fully sell out.